This is the 3-step price action blueprint that can launch you straight into success as a technical trader. And honestly, I'm convinced almost every pro trader and every institutional trader out there knows and uses this exact 3-step system consistently. No matter what strategy they run, it almost always rests on this same 3-step foundation. The power of this 3-step system is super simple to analyze. Imagine you take 100 trades using this method. Remember, this is a high probability 3-step price action blueprint. But let's assume the worst case scenario, only 55 to 60% end in profit. And because this blueprint gives you such a strong win probability, you pair it with a 1:3 risk to reward ratio, and that alone is already more than enough to give you a long-term statistical edge. This means if we run this strategy hundreds of times in a year, the final results create steady, stable profit, far bigger than what I'd get from just putting money into index funds or normal stocks, depending on the stock, of course. All right, guys, welcome back to Trader DNA, the home of traders who are done guessing and ready to trade like the pros. Listen, trading with pure price action isn't just some random YouTube trick. This is literally how the world's best traders, the pros, the bankers, the institutional guys, actual trade. They don't rely on 15 indicators flashing random colors all over their charts. Nope, they master the art of reading price movement in its purest form, raw and unfiltered. And that's exactly why they consistently crush the market. And here's the crazy part, you can do it too. If you learn to read price action like they do, you instantly set yourself apart from the 90% of retail traders who are lost under a jungle of indicators and confusing signals. You'll not only see the market more clearly, but your chances of becoming a consistently profitable trader will skyrocket. You'll be part of that elite 10% who actually know what's happening behind every single candle. That's why in today's video, I'm going to show you my simple 3-step process that completely changed the way I trade price action. It took me from feeling like I was trying to solve rocket science to trading feeling as easy as counting 1, 2, 3. No exaggeration. So before we jump in, do me a favor. Smash that like button if you're ready to level up your trading game. And if you're new here, hit that subscribe button and turn on notifications to officially join the Trader DNA family. All right, guys, welcome back to Trader DNA. And if this is your first time here, buckle up, because what you're about to learn is one of the most powerful skills in trading. I'm talking about price action trading, the exact method professional traders, bankers, and hedge fund managers use to dominate the markets every single day. So what is price action trading? Let me make it super simple. It's trading based only on what you see on your chart. No flashy indicators, no clutter, no noise, just pure price movement. Every single decision you make is based on what price is actually doing right now. It's like learning to read the heartbeat of the market itself. And here's why it's a total game changer. When you learn to read price action correctly, you'll start spotting high probability setups with laser precision. You'll understand how trends form, how support and resistance levels react, how supply and demand zones work, and how candlestick or chart patterns tell the story of big money entering and exiting the market. Combine all of that and suddenly you're not just trading, you're strategizing like a pro. And in today's video, we'll focus on how to do this in Forex and stocks, step by step, using the same system I use on my own chart. But here's the thing, this is where most traders completely lose it. They know what price action is, but they have no clue how to apply it correctly. They jump in randomly, throw on a few lines, and then wonder why their trades fail. So today, I'm going to fix that for you with my simple 3-step formula that I use for every single price action trade I take. And listen, this isn't just some boring checklist. This is a complete decision-making system that helps you avoid one of the biggest rookie mistakes, placing random trades. Because let's be honest, a lot of beginners wake up, open their charts and go, I feel like trading today. Then they just click buy or sell with zero preparation or analysis. That ends today. These 3 steps will teach you how to prepare like a pro before you even think about pressing that button. So let's jump into step 1, identifying the trend and structure levels that matter most. All right, check this out. On the screen right now, we've got a 4-hour chart. but you can do this on any time frame and on any instrument, Forex, crypto stocks, gold, whatever you like. So here's what I do first. I ask myself, what trend are we in right now? Every trader defines trends a little differently, but in this example, we're clearly in a downtrend. Why? Because price just made a strong drop and broke into a new lower low. By definition, a downtrend forms when the market creates a low, followed by a lower low, and a high followed by a lower high. And that's exactly what's happening here. This perfect 1, 2, 3 move. Boom. Trend identified. Now we move to the next part, structure levels. Here's how I find them. I look for the most recent level that was broken in that 1, 2, 3 move. Let's mark it up. Step 1, step 2, step 3. That's our key level, the latest low that price just broke through to confirm the new trend. Then I ask myself, is this just a random low or is it a powerful level that's been tested before? So I zoom out, look left, and boom! You can see that price has respected this zone multiple times in the past, both as support and resistance. So now 2 big check marks. Trend identified, downtrend, downtrend. Key structure level found confirmed by multiple past reactions. And this is absolutely crucial. I only trade from a structure level that's both recently broken and tested multiple times. That's the sweet spot where price action becomes super reliable. If those 2 boxes are checked, then congratulations. You're ready to move on to step 2. All right, guys, welcome to step 2, the preparation and prediction phase. This is where things get seriously exciting because now we're not just watching the market, we're actually learning how to think like a pro trader before making any move. And trust me, this step separates the amateurs from the legends. So imagine this for a second. Price is sitting right here at the end of this candlestick. You're staring at your chart and the $1 million question is, what's going to happen next? And guess what? It all boils down to just 2 simple possibilities. Number 1, price could keep dropping, continuing the current trend. Number 2, it could bounce up for a short retracement before maybe falling again. That's it. Up or down. Simple, right? Well, not exactly. Because while it looks simple, most traders still mess this up. They don't prepare for both outcomes. They just hope the market does what they want. But pros don't trade based on hope. They trade based on preparation. So here's the secret. Before you ever hit that buy or sell button, you need to ask yourself 2 powerful questions. If price goes up, what's my plan? If price goes down, what's my plan? It's that mindset shift that changes everything. Let's say the market goes up and touches your key structure zone, the one you identified earlier. If the trend is still down, then this move is probably just a retracement before another drop. Why? Because we already know from step 1 that the dominant trend is bearish. And that structure zone is a proven area where sellers love to jump back in and push price lower. So in this phase, your job is simple. Create 2 clear scenarios, up or down. Build a plan for what you'll do in each one. For example, if price rises into your resistance zone and starts slowing down, you could predict that it'll bounce back down, meaning a potential short setup. But if price breaks through that zone and keeps going higher, then your bearish idea is invalid. You step back, you don't enter, you wait for a new valid setup, because trading smart means knowing when not to trade. This step might sound basic, but this is the foundation of consistency. This is what stops you from making the same mistake that kills most beginner traders, jumping into random trades just because they feel like trading that day. And once you've mapped out both scenarios, once you've planned what to do no matter where price moves, that's when you're finally ready for the fun part. Step 3, take action. Now this is where your preparation meets reality. Everything you've analysed, every level you've marked, every prediction you've made, this is where it all gets tested in the real market. At this point, it's go time. You've done the analysis, you've built your plan, now you execute, but with precision. Some traders wait for a clean chart pattern like a head and shoulders or double top. Others wait for a candlestick confirmation or even watch for signs of strong buying or selling pressure before pulling the trigger. There's no single perfect entry style. What matters is that your decision isn't random anymore. It's backed by logic, structure, and a repeatable process. And that, my friends, is the final part of our 3-step price action process. Step 3, take action. Because when you combine trend analysis, structured predictions, and confident execution, you're no longer guessing. You're trading like a pro. And that's exactly how you start building the foundation for long-term, consistent profits. All right, guys, listen up because this part is absolutely crucial. If you follow and actually apply this 3-step process, you're literally putting yourself in the best possible position to catch high probability trades, the kind of setups professional traders live for. But here's the harsh truth. Most beginner traders, they don't do that. They just want to get in the market as fast as possible. No plan, no structure, no logic. They wake up, open their charts and think, I'll just trade today. And boom, they hit buy or sell without even knowing why. And you know what that is? That's not trading. That's gambling with extra steps. You should only enter a trade when the odds are stacked in your favor, when your setup is strong, your confirmation is clear, and your risk to reward ratio makes total sense. Because that's how you trade like a sniper, not a machine gunner spraying bullets everywhere. Let me show you an example. When price entered the zone I was watching, I noticed something powerful, heavy selling pressure on the lower time frame. That was my green light. That was my signal to strike. So I placed my sell order right there, exactly around that zone. And then the magic happened. Bam! Price dropped like a rock, slicing straight through the chart. It was one of those moments that makes you go, yes, that's exactly how it's supposed to work. But hold up. I want to make something super clear here because this is where 90% of traders still mess up. Most traders are great at step 3. They know how to click the button, they know their chart patterns, they can spot a double top or a perfect engulfing candle. But they still lose. Why? Because they completely skip the first 2 steps. They never truly identify the trend. They ignore the structure, don't prepare or predict what could happen next. They just react, and that's exactly why they keep losing. So here's the golden rule. Always start with step 1, identify the trend and key structure levels. Then go to step 2, prepare and predict possible scenarios. Only then move to step 3, take action and execute your plan. If you skip the first 2 and jump straight into the 3rd, you're not trading like a professional. You're literally rolling dice in the world's biggest casino, the financial markets. So remember, this 3-step process isn't just a strategy. It's your blueprint for discipline, patience, and precision. Master it and you'll start trading like the top 10%, not the 90% who lose money every single day. Now, let's keep this energy going, because next, I'm going to show you exactly how this process plays out step by step in a real live chart example. Let's go. All right, guys, check this out. Now we're jumping straight into this chart and we're about to break it down just like before, step by step. But this time I want you to really see what's happening, because if you get this part, you'll start looking at charts like a pro. Step 1, identifying the trend and the key structure level. And listen, have you ever seen a beginner's chart that looks like someone dropped a spaghetti bowl of horizontal lines all over it? It's chaos. If your chart looks like that, don't worry. We've all been there. But here's the truth. When your chart's a mess, your brain can't focus on what actually matters. You start seeing noise instead of signals. Tip of the day, keep your chart clean, 1 level at a time. That's it. You don't need 100 lines, you just need the right one. Once price breaks through that level and moves on, then you mark the next one. Trading isn't a contest to draw the most lines. It's about clarity. The cleaner your chart, the clearer your next move becomes. Now, zoom out a bit. What's the trend doing right now? If you said downtrend, boom, you're absolutely right. Doesn't matter what indicator you use, everything screams downtrend. Lower highs, lower lows, price just sliding down like it's on a water slide. But here's where most beginners crash. The trend doesn't always picture perfect. Sometimes it stalls, pulls back, consolidates, and traders freak out. They jump in too early just because they want to trade. Big mistake. If the market looks messy and directionless, don't force it. Seriously, move on. There's always another chart setting up somewhere else. If you have to guess whether the market's trending or not, it's probably not. And when the trend doesn't clear, that's your cue to sit tight. Remember, patience pays more than random trades ever will. All right, back to the chart. We've confirmed the downtrend. So what's next? We focus on the most recent broken support level. That's our gold mine. That's where the market tends to react again. Why? Because what used to be strong support often flips into strong resistance once price breaks below it. It's like a door that locks behind you. Once it's closed, it's hard to push back through. Now here's the fun part. Step 2, the preparation and prediction phase. This is where you become the strategist. You ask what could happen next. Only 2 possibilities. Price goes up or price goes down. That's it. If it drops, awesome. We want it to break the previous low and keep sliding down with the trend. If it goes up, no problem. We want it to retest that resistance area and then fall. Either way, we're ready. And that brings us to the 3rd step. Take action. This is the moment of truth. Personally, I wait for a strong confirmation, like a double top or a head and shoulders pattern on a smaller time frame. So if I'm analysing on the 4-hour chart, I'll look to enter on the 1 hour. But sometimes, if everything lines up perfectly, clean structure, clear rejection, strong candlestick, I'll go aggressive and take the entry right off the main time frame. And in this setup, it was textbook perfect. Price pulled back to the exact resistance we marked, gave a strong entry signal, and boom! The market dropped like a waterfall. Straight down, fast, clean, beautiful. But hey, before you get too hyped, remember this, not every trade ends this perfectly. Some setups fail, some look great and then flip against you. And that's okay, because what matters isn't being right every time, it's following a consistent process that puts the odds in your favour. And in just a minute, I'm going to show you a losing trade too, so you'll see both sides, when this strategy absolutely crushes it, and when it doesn't, because that's how you truly learn to trade like a pro. Stay tuned. The next example is going to surprise you. Alright guys, this part is crazy important, so stick with me because I'm about to show you something that most traders never truly get. Let's dive into this chart together. And just like before, we're going to follow our 3-step process. Identify, prepare, and predict. Sounds simple, right? But this is where real traders separate themselves from beginners. Now, even though we already know how this trade ends, pretend we don't. Imagine you're sitting right there in front of the screen, live market, candles still forming, your heart racing, you don't know what's going to happen next. And that's exactly how every trader should think. Step 1, identify the trend. Look closely. What do you see? Boom, an uptrend. Higher highs, higher lows, everything moving upward like a stairway to profit heaven. The market is literally telling you, hey, I'm going up. Next, we find the last resistance level that price broke through. You can see it right here. Let's mark it with a clean horizontal line. And check this out. If you scroll to the left, you'll notice this exact area has been tested multiple times before. That means this was once a strong wall of resistance, and now it could turn into your best friend, a new support zone. Now let's draw that zone properly. And yeah, I know what you're thinking. How big should the zone be? Great question. And here's the truth. There's no fixed size. You build your zones based on what you see. The more times price has touched or respected that area in the past, the more powerful it becomes. The key is not perfection, it's understanding reaction. So now we've got 2 things locked in. A strong uptrend, a valid structure zone. That's our foundation. Now we move to step 2, preparation and prediction. This is where we ask, what's most likely to happen next? Only 2 options, right? Price can go up or down. If price drops, we expect it to bounce from this new support area, because remember, old resistance often turns into new support. Makes sense, right? So now, let's see what happens. Price dips straight into our zone, and bam, a big bullish candle forms with massive buying pressure. This is it, the perfect signal, so you go for it. You press that buy button, set your target with a clean 1-3 risk to reward ratio, and you're ready to ride the trend. But then, boom, price flips, reverses hard, and hits your stop loss. Ouch, that hurts. You did everything right, yet the market said, nope. And this right here is one of the most valuable lessons every trader needs to understand. Even the best, highest probability setups can lose. Even professional traders, the guys sitting behind multi-million-dollar desks, take losses every single week, because here's the truth, no strategy is 100% accurate. Every technical factor can line up perfectly, trend, indicators, patterns, candlesticks, and the market can still do whatever it wants. When I hit buy or sell, I don't know what will happen next, and neither does anyone else. If someone tells you they can predict the market with absolute certainty, they're lying. If we could do that, we'd all be trillionaires by now. Trading isn't about predicting the future. It's about playing probabilities, stacking the odds in your favour. That's what professional traders do, institutional traders do, and that's exactly what this three-step system helps you achieve. Because here's the math. Let's say you take 100 trades using this system, maybe 55 to 60 of them end in profit. And with a 1-3-3 risk to reward ratio, you don't just win more, you win bigger. That's your statistical edge, your secret weapon. Do that consistently over hundreds of trades a year, and you'll see something amazing. Your equity curve starts climbing steadily upward. It's not magic, it's math. And honestly, this system can outperform index funds, long-term stocks, even some hedge funds when applied with discipline and consistency. So what's the takeaway? Simple. The power of trading doesn't come from one single trade, it comes from consistency. One trade is random, 10 trades are luck. But 100 disciplined trades following a proven system, that's where real profits are made. That's how pros win. That's how you build wealth. And that's why this three-step system isn't just another strategy. It's your blueprint for long-term success in the markets. All right, guys, we've come a long way in this video. And yeah, I know that last part might have sounded a little like a mini lecture, but trust me, that's the part most traders skip. And that's exactly why they stay stuck. If you actually take the time to understand what I just explained, you're already miles ahead of 90% of traders out there. So let's look at him with one final example, the third setup, because 3 examples are the magic number to really burn this concept into your brain. Ready? Let's go. Now look at this chart. Step 1, identify the trend and key structure levels. And wow, it doesn't take a genius to see this one. The market is absolutely crashing, like waterfall level crashing. Every candle is just dropping lower and lower. This is what we call a clean, powerful downtrend. No confusion, no sideways chop, just pure bearish momentum. All right, step 2, find the structure that matters. Normally I'd mark the higher level because bigger zones usually create bigger reactions. But this time I'm picking a level slightly lower. Why? Because if you look left, that exact zone used to be a strong support. And guess what? It just broke. Not only that, but if you scroll back a little further, you'll notice price bounced hard from this same area in the past. That means this level has history. It's like a magnet for price action. So right there, we've got our zone. Here's what we know so far. The trend is down. The structure zone, a previous support that could now flip into resistance. That's step 2, locked and loaded. Now it's time to step 3, preparation and prediction. And this part is all about playing out the what ifs. There are only 2 possibilities. If price keeps falling, we expect it to break below the previous low, continuing the downtrend. If price pulls back upward, we want to see it bounce off that resistance zone and fall again. So in simple terms, if price climbs back to our marked zone, we'll be waiting like snipers for a sell opportunity, because statistically, that's where the next big drop is most likely to start. And then it happens. Price climbs right into our zone. You're watching, your pulse is racing, and as soon as the market shows the first clear sign of selling pressure, boom, we enter the trade. Sell position activated. Seconds later, price starts dropping, then dropping faster, and before you know it, it's in free fall. The chart looks like a cliff dive. That's when you sit back, breathe out, and realize you just executed the plan perfectly. You followed the process, step by step, and it worked. Now listen, I'm not saying every trade will go this perfectly, it won't. There will be losses, and that's part of the game. But when you follow a proven system like this with structure, discipline, and patience, that's when trading stops being gambling and starts being strategy. So if you learned something valuable today, do me a favor, smash that like button so more traders can find this video. And if you're new here, hit subscribe and turn on the bell so you don't miss the next deep dive tutorial. Because in my next videos, we're going even deeper. breaking down real setups, live trade examples, and advanced psychology tricks that top traders use every single day. And hey, if you've made it all the way to this point, seriously, thank you. It means you're not just watching, you're learning, you're investing in yourself, and I respect that more than anything. Let's get it, traders.